Here's what nobody tells you when your first 1099 lands in your mailbox. The IRS does not treat you like an employee who happens to work for themselves. They treat you like a business. And businesses owe a tax that employees never see on their own paychecks. It's called self-employment tax. It's 15.3% on top of your income tax. And at $30,000 in freelance income, it can hit you for over $4,200 before you've paid a single dollar of federal income tax. According to the IRS, roughly 16 million Americans file Schedule C each year, and a huge portion are blindsided by that number the first time. Here in 2025, the rules have not gotten easier. The standard deduction rose to $15,000 for single filers. That part helps. But self-employment tax has no standard deduction to hide behind. So if you're freelancing at $30,000 and trying to keep your head above water, this is the exact playbook you need. Your actual tax bill, running the numbers. Let's slow down and do the math, because seeing the full number is more useful than any vague warning. You earned $30,000 in freelance income this year. First, the IRS lets you deduct half of your self-employment tax before calculating income tax. Half of $4,239 is about $2,120. So your adjusted gross income for income tax purposes is roughly $27,880. Now subtract the 2025 standard deduction, $15,000 for a single filer. Your taxable income is now approximately $12,880. That falls inside the 12% federal income tax bracket. At 12%, you owe about $1,546 in federal income tax. Add your self-employment tax back in, $4,239 plus $1,546 gives you a combined federal tax liability of roughly $5,785. On $30,000 gross, that's an effective total federal rate of just under 20%. That number surprises people. It surprises them because in a W-2 job, your employer absorbed half of the Social Security and Medicare taxes, 7.65%, invisibly. You never saw it leave your check. As a freelancer, you are now both the employer and the employee. You pay both halves. Now, your state situation changes this math. If you live in a state with no income tax, Texas, Florida, Nevada, and a handful of others, your total bill stays near that federal figure. If you're in California or New York, add several more percentage points. Run your own state numbers, but start with this federal baseline. The right move is to hold 25 to 30% of every payment you receive in a dedicated savings account, not your checking account, from day one, not after tax season. Now, the deductions that move the needle at $30,000. Here's where survival mode gets a little breathing room. The IRS tax code, specifically Section 162, allows freelancers to deduct ordinary and necessary business expenses. That language matters. Ordinary means common in your field. Necessary means helpful to your work. Both tests must be met. At $30,000 income, you are not going to deduct your way out of a tax bill entirely, but you can meaningfully reduce your net profit, the number self-employment tax is calculated on, and that shrinks everything downstream. The home office deduction under Section 280A is one people skip because they think it's an audit magnet. That fear is outdated. The IRS simplified method allows you to deduct $5 per square foot of dedicated workspace, up to 300 square feet. That's $1,500 off your net profit, no receipts required. The space must be used exclusively and regularly for business. A desk in your bedroom where you also watch TV doesn't count. A spare room you use solely for client work does. Health insurance premiums are another one. If you are self-employed and not eligible for coverage through a spouse's employer plan, you can deduct 100% of your health insurance premiums as an above-the-line deduction. According to the Kaiser Family Foundation, the average annual premium for individual marketplace coverage in 2024 was around $6,060 before subsidies. If you're paying that, it comes straight off your adjusted gross income, not just your Schedule C, but your AGI. That flows through to lower income tax, though it does not reduce self-employment tax. Software, equipment, internet, professional education, and platform fees are all fair game under Section 162, as long as they are used for business. Keep records. A simple spreadsheet with the date, amount, vendor, and business purpose is enough. Don't overcomplicate it. Don't underdo it either. What most people get wrong here is treating deductions as a bonus they find at tax time. The right approach is to track them monthly because a deduction you can't document in April is a deduction you'll lose. The IRS burden of proof rule is simple. You must be able to substantiate every deduction you claim. Build that habit now, not in March. Quarterly payments, the system that protects you. The IRS does not wait until April to collect taxes on freelance income. They expect payments 4 times a year. and if you skip them, you pay a penalty on top of whatever you owe. According to the IRS, the underpayment penalty rate for 2025 is 8% annualized. That's not catastrophic, but it's money going nowhere. The 4 due dates are April 15th, June 16th, September 15th, and January 15th of the following year. Mark those now. Miss April 15, and you're already behind. Here's the calculation that actually works at $30,000. Your total federal tax liability from the math we ran is roughly $5,785. Divide that by 4. Each quarterly payment is about $1,446. Add your estimated state tax on top if your state requires it. There is a legal safe harbor that protects you from penalties even if your income swings during the year. Pay either 100% of last year's total tax liability spread across 4 quarters, or 90% of your current year's expected liability, whichever is smaller. If last year you owed $4,000 in total, paying $1,000 per quarter shields you from penalties even if your income grows this year. The IRS calls this the safe harbor rule, and it is your best friend in a variable income year. I focus on the financial side of freelance and gig work, and this is the thing I see people skip most. They don't skip it out of laziness. They skip it because the cash is sitting and checking and it feels wrong to send it away early. Set up a separate savings account, auto-transfer your 25 to 30% after every payment received, and treat that account as untouchable. The quarterly payment then comes from a pool of money you've already separated, not money you're scrambling to find. The retirement move that doubles as a tax cut. This is where survival mode turns into a strategy. A SEP IRA, Simplified Employee Pension, lets you contribute up to 25% of your net self-employment income and deduct every dollar contributed from your taxable income. The 2025 contribution limit is $70,000, which is the IRS ceiling. Not what you'd hit at $30,000, but the rule scales down proportionally. At $30,000 gross, your net self-employment income after the SE tax deduction is approximately $27,880. 25% of that is about $6,970. Contribute that to a SEP IRA, and your AGI drops by nearly $7,000. Run that through the numbers. Your income tax obligation shrinks from roughly $1,546 to somewhere closer to $700, depending on your exact deductions. The self-employment tax doesn't change because the SEP contribution doesn't reduce net profit on Schedule C. But your income tax bill just got cut nearly in half, and you built $6,970 in retirement savings doing it. If a SEP IRA feels like a stretch on a $30,000 budget, start smaller. A traditional IRA lets you contribute up to $7,000 in 2025. That contribution is also deductible if your income is below the phase-out threshold. And at $30,000, with no workplace plan, you are well under that limit. Every dollar you put in reduces taxable income. Even $1,000 invested now at a 7% average annual return, the historical long-run stock market average, becomes roughly $7,600 in 30 years. That is not a typo. That's compound growth starting from survival mode. One edge case worth flagging. A solo 401k is often better than a SEP IRA for very low net incomes, but it requires more administrative setup, and you must open it before December 31st of the tax year. The SEP IRA can be opened and funded as late as your tax filing deadline, including extensions. At $30,000 and starting out, the SEP IRA or traditional IRA is the simpler, lower friction move. Once your income grows past $60,000, revisit the solo 401k comparison. The employee contribution limits make it far more powerful at higher income levels. Putting the plan together. Here is what this looks like as one system, not a list of tasks. Every time a client payment hits your account, move 25 to 30% immediately to your tax savings account. Once a month, spend 20 minutes logging your business expenses in a spreadsheet. 4 times a year, send your quarterly estimated payment to the IRS via IRS Direct Pay. Free, no service fee, takes 5 minutes. Once a year, before December 31st, make your retirement contribution and watch your tax bill recalculate. That's the whole plan for a $30,000 freelancer. It is not complicated. It is just something no employer ever built for you. You're building it yourself. At this income level, the goal is not optimization. The goal is not losing money to penalties, not getting blindsided in April, and not letting a tax bill derail the work you're doing to grow. Those 3 things handled, you're already ahead of most freelancers in your first year. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this video gave you a clearer picture of where your money actually goes, hit subscribe. There's more of this coming. Every video in this playlist goes deeper into the income tier playbook as your freelance income grows. Drop a comment below with the specific tax or money question you want me to tackle next. If there's something tripping you up, quarterly payments, deductions you're not sure about, retirement accounts, tell me and I'll build it into an upcoming video. Next up, if you're earning tip income as a gig worker, the IRS may owe you up to $25,000 back. And most people never claim it. That video drops next, and you don't want to miss it. This video may contain affiliate links. I only recommend tools I use personally.